Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, February 16th. U.S. stocks are swinging back and forth between losses and gains so far today as disappointing earnings reports from Kraft Heinz and other consumer companies sapped some of the momentum built in the past 5 sessions. At the moment, however, the 3 major indexes are higher. The Dow's up triple digits and are set for a strong finish to the week, rallying from the lows of last week's sell-off as investors shrug off inflation fears and focus on economic and earnings growth. And on that note, let's move to 3 charts that could give us some insight into the week to come. Now, as we usually do, we're going to look right now at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely tracks our S&P 500 benchmark index. Now, you may remember the last time we talked, the SPY made an all-time closing high on January 26th at $286.58, or about $28.65 on the S&P 500 itself. Since then, it fell sharply on all the volatility we've had to a relative low on February 9th, all the way down to the 200-day moving average, actually moved a little bit below it intraday to $252.92, then rallied back up since then off that 200-day line. And when I captured this chart today, it was trading at $274.34. Just below the red line, the simple 20-day moving average, and just above the green line, the simple 50-day moving average. Now, this is the $64,000 question for those of you who remember that television show. Can the SPY remain above the 50-day moving average, which is coming in right now at $272? That should act as pretty decent support if this market can remain in an upward move into the coming week. So can the SPY remain above the 50-day moving average? I like to see it above that line, closing above it, I should say, for at least 3 days. And that should give it some impetus to move back up to the upside and perhaps grind higher up back toward 280 or 2800 on the S&P 500. If not, if it can't hold these gains, if it doesn't have legs in the coming week, then we could see it possibly make a retracement back down to, maybe back down to toward 265 here, 2650, 2640 perhaps on the S&P 500 itself. Maybe it even has to go lower. We just don't know because of the extreme volatility in the market right now. So this is where the rubber meets the road. Can it stay above this important 50-day line and move higher in the coming week, or will it have a reason to try to pull back, gain some more buyers, and then pop higher from there? So it will be exciting, and we will find out. Certainly keep an eye on it when you're making any trades or investments next week. Now, our next chart today, as I've told you before, in Tony's Market Club, we watch the IWM, small cap companies valued at $300 million to $2 billion, as the iShares Russell 2000 ETF can act as a leading indicator for the broader market. The Russell 2000 small caps are kind of known to be able to do that. As we look at this daily chart of the exchange-traded fund, the iShares Russell 2000, where we can follow this index, we note that it made an all-time closing high back here on January 23rd at $159.96. Since then, it too has made a dramatic fall, but it just didn't fall and then quickly rally off the 200-day like the S&P 500 did. It fell down to this line, and the 200-day moving average comes in here at $145 and change right now. The IWM fell down to this line and has used it for really nice support. Actually, on the it made an intraday low of $146.77 back a week or so ago, but that was an intraday low. It's really stayed above this line, which is encouraging. It's rallied from this 200-day line, again, that comes in at right about $145. And when I captured this chart today, it was trading just at the 50 and 20-day moving averages at $153.88. So now the question for the IWM as well is, can it rally to close either today or next week? Can it rally to close above the 50-day line and head back up? Now, I'm going to tell you right now, the way this price has moved up has bothered me a little bit. I'd rather, and on the SPY too, I'd rather price grind higher in moves like these and take its time. I'd rather it not be a lot of a short squeeze and people coming in here sending it straight higher, because when price moves back up and moves up really high, really fast and near parabolic moves and back up to perhaps even prior highs, which would be nice. It can make you some gains there, but those kinds of moves, as we know, do have a tendency to retrace again pretty quickly. Not as dependable as just grinding and chopping it out easily back and forth one day at a time. So we'll have to see if this show-off mood continues above the 50-day moving average. It's fun for short-term gains. I maybe would be hesitant to put too many shares back in the market till I see if it can go up and sustain new highs and continue higher. Excuse me. So let's see what happens next week with the IWM. Again, we can use it as a kind of leading indicator for the broader markets. Let's keep an eye on it. Our last chart for the day is the Healthcare Select Sector ETF, the XLV. We have noticed with the XLV, and now this is covers the healthcare sector, and the top components in this are United Health, Pfizer, Johnson & Johnson, and AbbVie. Now it made, the XLV, a lot of pharmaceuticals, medical equipment, biotechs are in this, as well as healthcare companies. It made an all-time closing high on January 26th at $91.54. Then, like the major indexes, it fell from that high point to come down, back down to its 200-day moving average, which is coming in today at about $81. Fell down on February 9th, which seems to be the low day for most all indexes and ETFs. And many stocks fell to a low here of $79.56. But like the SPY and the IWM, it's managed to stay above the 200-day moving average, rallied back up, and when I captured this chart today, it was trading just above its 50-day moving average, below its 20-day, but above its 50-day at $85.56. So this is what I'm going to do with potentially what I'm going to do with the XLV next week. If it what I'd like to see it do, of course not that it's necessarily going to cooperate, I'd like to see the XLV next week pull back to somewhere around like $83, $84 and bounce from there. Certainly I don't want it to go back down below the 200-day moving average. If it does that, I'm going to lose my I will not want it if it falls back down below the 200-day line. So if it can move down and then back up a little bit, or if it continues up a little higher, I may purchase shares of the XLV. Initially, I'm going to use a close below the 200-day moving average as my protective stop. If it can move up, though, and stay above the 50-day moving average, the green line, which again is coming in at about $85 right now, I will use that as my protective stop. Ideally, I would like it to pull back as it's gone up 3, 4, 5 days in a row. I'd like it to pull back, then bounce, and somewhere in this bouncing area here, if it comes to pass, that's where I'll purchase stocks. If it gets above the 50-day and remains above it, again, I'll use that as my protective stop. If it just noodles around here down over the 200-day moving average but stays above it, then I'll use that as my protective stop until it moves back up and starts, until or if I should say it moves back up and continues in an upward motion. Okay, and now on to next week's economic reports. But first, please join us this coming Monday, February 19th, for our next session of Toni's Market Club. We will talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join us, go to tonismarketclub.com. And now for this week's economic reports. Not much going on Monday or Tuesday. On Wednesday, we have existing home sales and crude inventories. Thursday, we have jobless claims and natural gas inventories. These are all weekly reports. And then Friday, we have the Michigan Sentiment Report. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.